Please, Yogesh, I would like to just say a few words about Yogesh Satpute. Yogesh Satpute is a banker with rich experience. Hello.
Sorry.
Yeah.
Yes, sir.
Yogesh is a banker with rich experience in banking, audit, assurance, treasury. Not only that, he is a significant contributor to the guidance note prepared by ICAI, Institute of Chartered Accountants of India, since the last 2 years, very active participant, and has been contributing very significantly to the guidance note, which over 1 lakh chartered accountants look forward to every year. So wonderful, Yogesh, keep it up. Besides that, Yogesh is a brilliant in research-oriented person. Yogesh has done PhD. He has done international qualification like ICAEW. He has also done the joint program of ICAI with IIM, which is there for post-qualification experienced people in industry. So great work, Yogesh, setting benchmarks for other CAs to follow. And over to you, would like you to share your experience post-COVID, how banking is actually working on the ground and how people are handling challenging issues.
Yeah. So am I audible?
Yes.
Yes.
Before going directly on ground, because I don't think that we can directly start from ground that what is happening or not, because there must be a hell lot of challenges which people are facing right from reaching their place in office every day, because still nothing has been kind of regularized, kind of normalized that so far, including me. I am doing very leaps and bounds to reach my office every day. So I'll not get into logistic part of that, but yes, at ground level it is pretty challenging, just because Supreme Court or RBI, whatever we can say, we can keep hold of NPS. It doesn't mean that everything is fine, and there goes a lot of lagged kind of measurement till the time we actually assess or we kind of recognize an account as non-performing, and it has become non-performing. So technically speaking, many of the accounts are performing as on today, but many of them have had their premises shut since last 4-5 months, 6 months even precisely. So that was one of the factor that we will not going to have V-shaped recovery. So definitely, even after resuming economic activities, I personally feel that there will be a hell pile of NPS. Number one. Number two is coming back to consumption, because this consumption is directly coupled with everything else in economy, because it's nothing but a basic economic activity which happens and which gives motion to all other economic activities. So whatever government has did, I have my own kind of opinions on that. Probably that may not be that right, but still, what I personally feel is that whatever impact those measures will bring, or maybe a lesser impact that will bring, but somehow I feel that it shows positivity, it shows some kind of active involvement, active participation on the part of the government also, because government can't just sit and give assurance. Second thing, there might be many kind of I can say non-usable clauses, say kind of we are asking employees to spend 3 times of their LT amounts. So definitely employees generally even don't spend their LTs, and many of them get it tax deducted, so they just encash it. So how many will actually spend 3 times amount is questionable. But again, going back to my original point, that it shows some sort of kind of willingness on the part of government, that yes, they are willing.
Hello.
No sound.
Yogesh, you need to
Yogesh, you
unmute.
put yourself to mute by error. Yeah. Now
Yeah.
we can hear you.
Just hold on. Huh? Am I audible now?
Yeah, you're better.
योगेश जी पहले से थोड़ा बोलिएगा, पहले क्या बोले थे? Yeah.
I am actually not sure from which point I missed.
So Yogesh, you were saying it shows clearly the focus of the government is to willingness. Yeah, that's where when you just finished that, we lost you. Yeah.
So the government also wants actively manage the situation rather than just sitting on the fence and watching everything and then taking a kind of loose decision or delayed decision. I was coming back to the interest rates that anyways we were heading towards lesser interest rates since last 1.5 years. Although there was not a major cuts and 110, 100 bips cut was there in last 8-9 months itself. But yes, very before that we were heading to accommodative stance. We were heading to negative interest rates because maybe last 2-3 years I am continuously reading that if we factor in the inflation rate negative, we have, so even if you take an example of State Bank of India FD, which is offering 5.5%, 6% right now, we have inflation of 7%, 6%, whatever, if we factor in normalized inflation. So that inflation is completely eating out whatever interest we are going to get. So practically we are in the negative interest rate zone right now, today, on this day itself. Coming back to the original point of impact of pandemic, so definitely it has a balancing impact. Means I may be kind of over positive on all those things because those who have saving, they are getting at least lesser interest, but again it's an act of balancing because their income is getting transferred through these fiscal policies to those who can borrow at cheaper rates. So I feel that it is more of an act. Banks have their committed cost of funds and the transmission is not that fast. So many times the question comes that when interest rates are falling, why loans are not getting pretty cheaper quickly? Because they've already locked in their deposits and they don't have scope to further reduce till the time they get new deposits at lesser rate. And the same as someone has sent a message also on the chat box about term and repo market, because term and repo market is not being used for all these purposes. And if you see last kind of at least 2 months auction results, because RBI every week publishes the auction results, except state government securities, there is not that big kind of response because banks are already flushing with money. 3 days ago, I was reading one auction result. It was of excess 40-50,000 crores. So banks are not trying to borrow it because they don't have a place to park it. So even if RBI will give it at 3.5% for 1 year, what banks are going to do for that? So there is a kind of other way flow that banks are placing their money with RBI. And another kind of characteristic which I am observing since last 2 months is that because call, money market and term rates are substantially reduced, for last 2 quarters, banks can get good profit from their fixed income desks because as interest rates falls, probably valuation of securities goes up and there comes MTM gain, or even some banks have sold their some portfolios. So it can be a realized gain also. But again, my personal view is that this is not that kind of sustainable gain because banks can't sold something which they don't own, or banks can't gain something which they don't have. So whatever portfolio banks are selling, once they exhaust that portfolio, the gain tab will stop. So again, there is a limitation on showing treasury gains. So if I bifurcate the revenue streams or profit stream of a bank or a financial institution for that matter, so it will be more of a retail consumer banking, it would be a kind of treasury, and it could be a corporate banking. So treasury, I have just right now explained that there is very less headroom now remaining. Second thing, coming back to consumer banking, is not that happening right now till the time economy resumes. So say for example, till the time any concrete news on COVID comes, we have to wait. Otherwise, we just can't say that we are still resuming. Although government is giving title of unlock 1, 2, 3, and I think right now we are passing through unlock 5. But that is unlock just for the purpose of, I think, audit trail that government has done some unlock. Otherwise, there is no practical unlock till the time economic activity starts. And maybe high frequency indicators can be one of the positive sign of all these things. But again, I think that high frequency indicators have their own mortality cycle and they show highness today morning and again tomorrow evening they'll be died. So we just can't go by that. So a balancing act, like more kind of high frequency indicator plus lagged indicators plus long-term indicators plus more kind of economic activities, I think the combined effect has to come because there are several moving parts. And when we say several moving parts, it includes almost everything which is compensating, which is comprising of economy, right from we as a professionals up to the last person in the economy, maybe who is sitting below poverty line. So probably economic activities encompassing all these people may take some longer period as compared to what government is telling, or even what many corporates are telling. I'm surprised many corporates results have these clauses and they're just telling on their con calls that they expect this to be resumed and to be normalized by March 21. I'm actually surprised because I don't find it how they're going to resume till March 21. Any take on this, sir?
Recovery is going to take very long, for sure.
Yeah.
We are going to see a lot of bleeding before that. Yeah. Many companies are going to bleed, including banks.
But quite many companies result, they are showing that they are more or less reaching close to their pre-COVID level of activities.
Very few,
So
I would say, and certain sectors.
big company. I think big companies are recovering fast. It is basically problem of SMEs.
Right.
What I feel over is there is the concentration of business which is taking place, and the business is basically being more carried out by the bigger corporates, and they are trying to take over the market which was there for the MSMEs. MSME having difficulty. One thing is getting the people in place. Now,
Right.
because of the COVID, everyone have moved out to their hometowns. Because of it, the availability of people for making it run has become difficult. The bigger corporates have been able to use the technology to their favor. So there are multiple issues which have actually gone in the advantage to the big companies, and it is leading to a lot of concentration of business. That's what is my call on that.
There is an interesting message from Dhananjay Bagrodia that why stocks are going up, and I want Manas sir to speak something on it.
I was about to say that whether the picture is so gloomy for economic and all, then why the shares are so booming?
Not just ours, even US, by the way, there's
Yeah.
V-shaped
I
recovery.
would like to listen.
Manoj,
Manas.
you're on mute. We can't hear you. Manoj, you need to unmute. Manoj, you need to unmute. We can't hear you.
So you need to unmute.
Hello. Yeah, I think
Yeah,
you
now
can.
we can hear you.
Yeah.
Yes,
So
yes.
there are lots of people opening new demat accounts. There's a new generation which has come, and they have got some money, 5 lakh, 10 lakhs, 15 lakhs, to try their luck. And they are doing their own research, mainly online research. They are buying, and they had very good experience because they entered in March when the lockdown started, and they are making money. So new accounts are being opened. Companies like CDSL, they have doubled, tripled. They are making more business. Securities companies are making more business. So this is one demand from them. Second is supply of money is more because of stimulus. Hardik covered stimulus very well in the Indian context, but in the American context and a European context, Japan context, the stimulus is in trillions of dollars. So markets are going up globally, and there's a trickle down effect in India emerging market economy. So stocks are going up, quality stocks are going up, and even small caps, they went up till the SEBI issue came up on small cap, mid caps and mutual funds. As long as stimulus is there, now we are talking about US, there'll be even a bigger stimulus post elections. If it is there, bigger stimulus, you can imagine what will happen to stocks. Not only that, there was some questions on lockdown and impact. There was one thing on a chat, 40-50% has opened up. In certain sectors like auto and power, we have come to almost 100% of pre-lockdown levels. Power, auto, particularly in the month of September, October, we have come to 95% to 100% of pre-lockdown levels. So the performances month to month are getting better. September was very good, shown in GST collections also. October, as per my interaction with lots of CEOs and CFOs, bankers, shows October is going to be even better because of festive demand. November is going to be even better because of Diwali. So naturally, stocks will go up. So, and this is a great opportunity. Second thing is there is a linkage of interest rates and stocks. If the interest rate goes down, where do I put my money? Yogesh mentioned about 5.5% in State Bank, right? FD. If you're
5.5%
getting
is nothing actually.
5.5% in a FD in a State Bank, So earlier we were getting 7%, 7.5%. Banks like RBI, IDFC, Yes Bank were offering 7%. I know. So IDFC and RBL are still offering the highest rates. So if interest rates go down, where is the opportunity? Where do you put your money? Today there are stocks, particularly lots of PSU stocks. You are getting 6 to 7% dividend yield. 6 to 7% dividend yield. What more do you want? Stocks like ITC, stocks like PFC. There are many stocks in PSU. You are getting that much of dividend yield. Buybacks are there. So opportunities in stock market are there. People are making money. You have to gauge your own risk and invest accordingly. Or you decide you want to put money in a bank FD at 5%, 5.5%. The choice is very clear to intelligent professional. Most of participants in this group are professionals. So they can do their own calculation and it is very, very simple. If you expect, somebody mentioned about the second wave in the chat I saw. If the second wave is coming, if it is an impact on economy, so if there's a dip in the market, I think it will be another great opportunity to enter because in 2021, as per IMF and as per the FM Finance Minister, India is going to be the fastest growing economy in calendar year 2021. This year economy may be minus 9% calendar year. In by June, by the Q4 is supposed to be normal. And if we take calendar year 2021, India is supposed to be the fastest growing economy. That means more FII flows will come in. And if retail is buying, FIIs are buying. And mutual funds, if people don't withdraw or they grow even at a small rate, you can just imagine the opportunities for equity markets. Another thing is, there was a question also which I can address. Somebody said to have some small discussion on commercial paper repo. Now repo has been reduced to its lowest, as article confirmed, lowest in the last few years. And commercial paper, top companies like Grasim, Reliance, L&T Finance, Mahindra and Mahindra Financial, Bajaj Finance, they are today borrowing in commercial paper at around 3.7% when they were getting money earlier at 6%. Just imagine a reduction in cost of borrowings. So this is also giving a fillip because of huge liquidity. Cost of funds is going down. The yields, NIMs are maintained. Most of the banks, NIMs are just going down by 10 basis points. But cost of funds, average cost of funds has come to about 5.2%. So this is the lowest. I remember for Indian banking system, for the last 20 years, today you are getting a home loan at 7%. You are getting an auto loan at some 8.5%. So that's why you see auto industry is booming. People are buying autos, they take a loan and they buy auto. What cheaper price can it get? Home loan also at 7%, what cheaper price it can get? People are talking about COVID. Everybody who is working from home wants to have at least one new room, one extra room. So why not? He has the money. Why should not he do? And if he needs funds, he can go and take money from the bank at 7%. It's the lowest rate in the cycle. So this is, we talking about stock market. We are talking about boom in the real estate sector and low cost and alternatives of all asset classes. So today that is a sweet spot in a challenging healthcare situation.
Yeah.
I hope all the issues are covered.
Yeah.
I would like to inform everybody, next Saturday we have a wonderful session on sectoral analysis where we'll talk about sectors, a full financial sector, very detailed, intensive insights on NBFC sector, growth, asset quality. Plus, we will be having a discussion also on any credit rating issues. So we have a lot of expertise in this group. I would like to acknowledge a very good participation by members on this group, particularly on chat. All the participants who have participated on chat is wonderful. In fact, many answers, questions on chat were also answered by our stalwarts like Yogesh, Satpute, Anupam Petkar. So we'll be having more chats and you'll get the replies on chat also, besides response from the panel who have views on the same. So next Saturday, we have a wonderful session on 7th of November, 14th November, because it is Diwali. the panel decided to have off. Otherwise, we have very good material. But since our members should be busy in festive season, but again, we'll be having on 21st November also. There is a series. We have at least 10 Saturdays lined up. Very good quality of presentation by top corporate people, CXOs, CFOs, and idea is to make it interactive. We are known for interactive. I am glad it is wonderful. Please feel free share the link when you get to your colleagues in industry and profession. So we have more interactive sessions. There's something is there. We don't have names and details of all the participants because they have there are lots of invitees. So those who are invited, you please get in touch. You will get the link. And there are some requests also for a group. So our team members, Anupam and Sandeep, will work on that. If you have the details, we'll be having maybe a separate new group for webinars. Can I request now Anupam Petkar? He's a CFO, and to give a formal vote of thanks to all the participants and the panelists who have really worked hard for building on the series.
Yeah, thank you, Manoj ji.
Yeah.
First of all, let us thank Hardik ji for the excellent presentation and taking us through the various stimulus measures being taken by government and added inputs by Yogesh ji, you, Dushyant ji, and everyone. We're really happy to see that participants have taken this session very positively. They have liked it, and I request all of you, to either note my number or Sandeep anyone's number, and please send a message, and we will add it to your groups, and we'll plan to start this webinar sessions now onwards every Saturday. We'll start exactly at 11 to 1, and so we'll happy, and I will also request we'll try to see that more participant gets an opportunity to speak next time. This time few of the participants have raised some really very good questions on chat, and we would like to invite them to speak next time and ask the questions and make it more on an info discussion forum rather than the typical meeting. So thank you again once again everyone, and we like to thanks again thanks Hardik for the presentation and everyone.